Hi, this is Greg. Welcome to the channel. And on this channel, we talk about business and investment. And every once in a while, something comes on my radar screen, which is a compelling investment opportunity. And today, we're going to talk about none other than Intel Corporation. Now, as you know, the market over the last couple of days has been very volatile. The Dow Jones sold off close to 1,000 points a couple days ago. Intel also came out with a lousy quarterly report, and investors panicked and sold the stock off about 18%. So this has presented us with an opportunity, and I'm going to talk about it, and it's coming up right now. Okay, so I'm sure most of you are familiar with Intel. Okay, it's a very well-known technology stock, a very well-known company. It's been around for a long time. It is what I would call a mega cap technology stock. They make microprocessors, chips for PCs and desktops, and they have 3 other businesses that they're involved with. The firm makes a lot of money. But the great thing about these companies, these technology stocks, and in particular the chip stocks, is that they are very volatile, and the investors on Wall Street and the Wall Street analysts are very, very sensitive to bad earnings reports. So they have 1 or 2 bad earnings reports and the stock tanks. And if it's a good company, and if it's a company with very good long-term prospects, it gives us the opportunity to get in at a very low price. Now, I've been in and out of Intel for many, many years. I've seen it go through its cycles. Its chart does not look great. It's a seesaw pattern. It hasn't done as well as some of its competitors like AMD over the last year. So it is a stock right now that these analysts on Wall Street love to hate. But I think you'll see on this video as we get into it that this company has enormous earnings potential, and I believe that it has a very high quality management team, and I believe whatever the issues are with Intel, they're going to figure it out. So as a first step here, I want to play you an interesting interview with the CEO of the company, Bob Swan, and take a look at this, and then I'll be right back with some comments. Okay? Take it away.
Welcome back. It is the big earnings mover of the day, with Intel shares dropping about 11% after reporting data center results that were mixed and margins that spooked the street a bit. Joining us now, first on CNBC, is Intel CEO Bob Swan. Bob, good to see you. Good morning.
Good morning, John. How are you?
I'm doing pretty well, and I want to get straight to this margin question. 2 points off of your expectations. A 2-point miss from your expectations is a lot. So can you explain what surprised you, maybe particularly on enterprise demand, and whether you've got enough data now or better methods to give you confidence you won't be surprised again?
Yeah, well, first, John, for the quarter, we had a pretty solid quarter, beating our expectations on both the top and the bottom line, and had a modest raise to our full-year outlook. So in some sense, we feel very good about PC demand, incredibly strong. Cloud remained relatively strong, but the enterprise business was pretty soft. So let me put the data center performance into context. For the year, the data center group is up 23% year to date, and the operating income is up almost 26%. So the data center business itself is having a fantastic year. The implications are the first half, as we expected, was much stronger, and we anticipated a softer second half. So, but for the full year, the data center business is having a fantastic year. The second point I would make, John, is our revenue for the year will be up about $1.8 billion higher than we anticipated at the beginning of the year. But the nature of that revenue, primarily driven by the demand for products as a result of COVID, is different. In the PC business, we're going to have a lot more notebooks. and fewer desktops. We're going to have more consumer demand and less commercial demand. And we're going to have more education, more small core products for the education market. But it's an incredibly strong market for the PC side, but the mix of those products, the end demand is a different mix where the ASPs have a tendency to be lower. That is having an impact on the margin rate, but give it with higher growth. And that same dynamic is playing out on the server side, where you have real strong cloud growth continuing, but the enterprise is softer as they bleed off some of the inventory that was built in a very strong first half for the enterprise group, which was up over 30% in the first half of the year.
Is that it, Bob? Was it an inventory build in the first half that then met the COVID impact on demand, and that's where the miscalculation of your expectation was?
Yes. You know, the enterprise group itself was flat for the year.
Right.
But it was up, 30% plus in the first half. And down 47% in the third quarter. So they're bleeding off the inventory that they built earlier in the year.
Okay, so clearly you can see from the interview, the company does and did have some issues, okay? The data center group was down 7%. The enterprise group was flat. They were impacted by COVID, understandable. They had an inventory issue impacted by COVID, again, understandable. Look, they got bumps in the road, and then they also have questions about their chip manufacturing, which, they're making some strategic decisions on that. So there is a lot going on. You can certainly dig into all of these details on your own. We're not going to hit every single detail on this video. I'm just going to try to hit the investment thesis, and that's what we're going to do right now. Okay, so now we're going to go to the earnings presentation, and we are going to look at this. This is the presentation that management does for the Wall Street analysts, okay? And I'm using this instead of the 10Q, which I normally use on these videos, but I think this was a good presentation to go through, okay? So let's go down here. They talk about, notably, the last bullet point. They're selling their NAND business. So they're divesting some businesses. They talk about their priorities. We'll go through that. Customer value. Financial highlights. Okay, so here you can start to see some of the reasons why the stock sold off and why people on Wall Street, these Wall Street analysts, are really hating it. Year over year, quarter to quarter, third quarter 2019 to 2020, you can see that the revenues went from 19.2 billion to 18.3 billion. Okay, but again, this is, the obsession with the short-term quarterly results, and I think you have to really look beyond that to really understand what's going on here in the investment thesis that I'm talking about here. Okay, again, this chart shows EPS is down 22%, which sounds like a horrific number. So sell the stock, okay. This is sources and uses of cash. We'll go over that, skip over that. Here's the data center group. You can see also on a quarterly basis, year to year, revenues went down. Operating margins went down. Not a good story, right? But again, it's just one quarter. These are the other data-centric business segments, and you can see what went on there. We'll kind of skip over that a little bit. The client computing group. Now this is an interesting one because this is basically where they sell the chips to. They have the PCs, the notebooks, and the desktop. You can see there down there in the lower right, down here, the PC volumes were actually up 11%. Okay, notebooks were down, desktops are flat, Desktops I don't think are growing these days. Most people are doing notebooks and PCs. You can see the revenue is up slightly, quarter to quarter, year to year. But this is what I focus on. Let's take a look at the outlook. And this is where I start to get interested. All right. This is the fourth quarter outlook. Again, not a very good story. And this is what people are focusing on, right? Revenue down 14%. Operating margins, which is something that they absolutely obsess on with Intel, I guess for good reason, but they obsess. Whenever the operating margin declines, they sell the stock. Here's the EPS, $1.10 a share, down 28%. Again, this is measuring 2019 to 2020 fourth quarter. All right, so that means whatever it means. But let's look at the full year 2020 outlook. Okay, this is what I like to focus on. Look, revenues is up $75.3 billion, up 5%. There is still pressure on the margins. That's not good. But the EPS is actually up marginally. Okay? Now, this talks again about the 3 quarters. So that really is about it. But I think you can see that the full year outlook is still, not great, but it's decent. Now let's go down here and take a look at the some of the financial results. And I thought this was interesting. Look here, the reconciliation of non-GAAP outlook. Let's just take a look at this. Okay, the full year outlook, right? And you can see this projecting $4.90 a share, full year. But look at this. Free cash flow, $18 to $18.5 billion. Okay, so clearly this firm is gushing cash. Clearly they have issues that they need to resolve. And you have to believe in the management to think that they are going to resolve these problems over the next year, couple of years. Okay, now, as I alluded to before, when you're looking at this stock, you really have to either look at it as a swing trade, meaning you're going to buy it low here, you're going to wait for it to rebound, and then you're going to trade out of it, or you're going to hold it again for, 2 to 5 years. And I think if you get in at this access point, at this entry point, you're going to be very happy that you did. Now I want to take you to an analyst who is also an investor at an asset management group called Gilman Hill Asset Management. Her name is Jenny Harrington. I want you to take a look at what she's got to say because I think she's spot on.
Are you getting out of Intel?
Not at all. The only thing I regret here is not buying it today and when we bought it in the spring. If I could buy it today and initiate a new position, I'd be happy to. The way I'm looking at this is that there's so much short-termism on the numbers today. When I think back to some of the best investments we've made, they've been at points like this. So we bought Target, for example, the day Amazon announced Whole Foods and there wasn't a positive report to be had. We bought Qualcomm the day after Brexit. There wasn't a positive report to be had. And those are very, very long-term focused investments. We're the same with Intel right now. So be it if there's a rough patch. In our whole holding period, which from here on will probably be 3 years plus, I'm quite certain we'll make money, and I'm quite certain that we'll look back on this and see it as a rough patch that they emerge from quite profitably. They make a ton of money, and they'll figure out a way back to growth.
Yeah, but they think, there are some who are going to make the case that their key parts of the business may be in fundamental decline, and that's why they're unlike the Qualcomms, which you mentioned, which are still players in 5G and other areas, and then Target, which is hard to make a comparison. It seems apples and oranges.
But you know what?
Yeah.
Sorry, back then, those were the same arguments that were being made for Qualcomm and for Target. And with this, So maybe their manufacturing is in decline, and if they do decide that it is, at least on the call we heard they're being flexible. And maybe they do say, hey, you know what? We don't have an edge here anymore. We're going to transfer the manufacturing to Taiwan Semiconductor. That would be a hugely bullish thing for Intel, and we think that there'll be a lot of upside that came out of that.
Yeah, but the data center though was bad. This is Stacy Rasgon. He's the #1 rated analyst in the space who covers it. Don't think that it can't get worse, he says. Gross margins missed hugely. Data center ASPs and margins collapsed. While we thought last quarter's call was bad, last night's was potentially even worse, as fundamentals are now deteriorating at an alarming pace. Reiterate, underperform. You know I have a great amount of respect for you, Jenny, and all that you do and how successful you've been. But how can you justify saying some of the positive things that you did when the evidence would suggest otherwise?
Well, let's take a look at Goldman's report, for example. So Goldman still has their sell, and I don't know if Stacy's numbers went up too, but Goldman's report still has a sell. But if you read through that whole report, they actually revised their 2022 numbers up in that. So I think we just need to see it play out. And yeah, short term it's ugly. Long term, this is a really powerful company, and I'm betting on the management being able to get things back on track in a positive way.
And that's the other part of it too, is that, I'm not sure what kind of time frames we're talking about. It's hard to argue that somebody has short-termism if they've been in the name for 5 years, for example. That stock, Intel's up 38% over that period. That's half the S&P. AMD over that period of time is up 3,500%. All right, if you want to go short-termism and go 3 years, Intel's down 7% over 3 years. S&P's up 35, AMD's up 470.
I would say your starting point needs to start now, though. And I think you've got AMD that's trading at, like 100 times earnings. You've got Intel that's trading at 10 times earnings. I don't think AMD will be able to sustain the magnitude of growth that they've had. Intel, there's just, and I know this is my repetitive argument, there's just nothing in the expectations. I said this 3 days ago. I was wrong. I thought expectations were low enough that they'd be easy to beat. They're not. Give me another quarter or two. But right now my spirit isn't broken on the expectation that they're going to get this right and find a way to grow and succeed.
Okay, so I think what Jenny had to say there is spot on, and it really forms the basis of my investment thesis on this. And I think her advice is very good here. Now, the last thing I wanted to do is let's take a look at the chart, because the chart is really instructive, and I think it tells a lot of things. Okay, so here is the chart, the Intel chart. If we went back a year or so, you would see an overall upward trend, but it's a seesaw pattern, as I said. Now look at this here. I think this is interesting. The end of July, big drop off. Went from a little over 60 down to 48. Then it recovered. See, this would be potentially a swing trade. Then it sold off again. Again, potentially another swing trade in here. But now, look at this. Completely falls into the basement, right? And now it's down around $44 a share. And when she was talking about it, Jenny, it was like right here at 48, which was compelling because it was at the last spot here after it sold off. It was at the last resistance point, but it blew right through that to 44, and so now it is selling at an extreme discount. Okay, so I think you can conclude from this that the stock is selling at a discount. It is one of those historical attractive entry points that we can look at. Could the stock go lower? Of course it could. But the thing is, the expectations right now on the street are so low for this stock that almost none of the analysts are positive on it. And that historically is always a good time to buy such a great company. I also believe that if you look at this and you look in past history and some of the issues that the company has had, I believe the high quality of management that the company has is going to address the problems and the issues that they have that we've talked about in this video. And I think they're going to overcome And once they do, and they get the earnings growth and the revenue growth back on track, this stock is going to go up and go up significantly. Okay, so I'm going to be putting some videos up on the screen here somewhere. They'll be coming in, and they are videos of previous videos of mine where you can look at and check out the channel, explore the channel, give you some more information on some other interesting opportunities that I've talked about. And I'm looking forward to you subscribing and liking, and I'll look forward to you being on board for the next video, which will be coming very soon.